This voice is taken from an article with the title, How Do I Interpret the Economic Calendar?, which has been published on TraderTalks.net. Interpreting the economic calendar is an important part of successful forex trading. The economic calendar is a tool that provides information on economic events, such as central bank decisions, economic releases, and other indicators. It is important to keep track of these events as they can have a direct impact on the currency markets. The economic calendar is typically divided into three main categories. 1. Central bank decisions. Central banks make decisions on interest rate changes, which can have a significant impact on the currency markets. For example, if a central bank raises interest rates, it can lead to an appreciation of the currency. And if it lowers rates, it can lead to a depreciation of the currency. Therefore, it is important to pay attention to central bank decisions. 2. Economic releases. Economic releases provide information on the state of the economy. They can be indicators of future economic activity, such as GDP, retail sales, and unemployment figures. This information can be used to make decisions on the currency markets, as it provides a good indication of the future direction of the economy. 3. Other indicators. Other economic indicators can also be used to make decisions on the currency markets. These include consumer and business sentiment surveys, housing figures, and inflation data. When interpreting the economic calendar, it is important to understand the implications of the events. For example, a central bank decision can have a large impact on the currency markets, while an economic release may have a smaller impact. It is also important to understand the context of the data and how it may affect the currency markets. In addition to understanding the implications of the events, it is also important to understand the timing of the events. Different events can have different time frames, and these time frames can vary from country to country. Therefore, it is important to keep track of the timing of the events and to be aware of when they will take place. Finally, it is important to understand the impact of the events on the currency markets. Different events can have different levels of impact, and it is important to understand how the markets may react to each event. This can help traders make informed decisions when trading the currency markets. In conclusion, understanding the economic calendar is an important part of successful forex trading. It is important to pay attention to central bank decisions, economic releases, and other indicators, as these events can have a direct impact on the currency markets. It is also important to understand the timing of the events and the impact they may have on the markets. By understanding the economic calendar, traders can make informed decisions when trading the currency markets.